Hello and welcome to this morning's webinar. And as I said, if you were with us earlier, thank you so much for your patience. The recording is up and running. But as always, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, where are we? Let's go. Those of you who have come along regularly will know that I run this session together with my husband David, who I can see is still sorting out his headset, but I'm sure he'll be fine by the time we get to the charts. And that's me and David, obviously. And as always, we'll be looking at the markets through the prism of our methodology, which is volume price analysis, supported by our fantastic quantum trading software. And I know there are those of you who come along who have already invested in the software, and it's always lovely to have you come along. And I know there are those of you who maybe have just bought the books that are available on Amazon to explain the methodology in more detail. With regard to the methodology as it applies to the forex market, what we've put together is what we call forex trading library, and that is the book on the VPA, but also what we call the 3D book, because the way we approach this market, and all markets actually, but the forex market, is we not only look at the technical analysis side, the technical picture, and VPA is our base methodology, but we also look at what the fundamental landscape is like, what are the releases, and we add a third dimension to that, and that is we look at the related markets. And in fact, the pair that I'm going to be looking at that I've had on up, well, it's one of my favorite pairs, which is the pound Aussie, really brings together the technical picture, the fundamental picture, also what is happening in related markets, because the Aussie is a currency that reflects market sentiment, in the sense that if if markets aren't very happy, or they're risk averse, as it were, the Aussie will reflect that on its own. I suppose we should add a fourth dimension to our 3D approach, and that is the political, and certainly anything to do with the pound. But as I said, when we come to look at the charts and the pound Aussie trade that I've been considering this morning, we'll explain that in more detail. But it's all up on Amazon, as I said, the library, and I think it's $9.99. It is the digital version. This is actually a slide from our forex program, because a lot of traders start with just the books, and then if they want to really have a deep dive into the topics that I've just mentioned, then this is what the forex program does. And as we can see here, this is where we have this interrelationship, this very close connection between the four capital markets. We've got bonds, equities, forex, and commodities, and more. When we first started this business, it was much more linear. It was much more one-dimensional, in the sense that if you did forex, that's all you pretty much did. You didn't really pay any attention to what the other markets were doing. The days were you could start at the beginning of the week and, oh, is the market going to be buying the dollar today? Oh, well, let's all buy the dollar. And you could kind of more or less be not assured, but you pretty much know what was going to happen the rest of the week. Would you agree with that, David? Would you say that was true? It was more straightforward. I wouldn't say it was any necessarily easier, but it was more straightforward. Now, the 24-hour news cycle, as I said, with the politics, it really does impact the markets so quickly. Forex is sitting at the center, and what the program does is really goes into a deep dive, not only with volume price analysis, but also, as I said, this 3D approach. But as I said, we've got the fourth dimension, which is the political dimension, and the tools that we have developed to help us make sense of what is happening in the forex market in any time frame. We've put them together in what we call the currency dashboard. These are these four indicators. You can buy them individually, or you can buy them as a bundle of four. We've actually come up with another bundle, which is just the CSI and the matrix, and I'll have details of that before we close the webinar later on. But what it does, it really deconstructs the market for us. First of all, we have what the individual currencies are doing. As I said, we're looking at the Aussie, not only because it's a risk, it's a sentiment currency, but there was actually some news out in in Australia and New Zealand, and that's had quite an effect on both the Aussie and the Kiwi, which have been selling off. Then what the matrix does, it ranks the pairs. So which of those it takes the individual currencies and looks at, you know, where is the strongest move, if you like, either on a buy or on a sell. Then we have the array, which really measures momentum. So you will find if you have the currency in the matrix, the ranking of the pairs won't match because it takes another metric. For the metric is different for the array as from the matrix. Then we have the heat map, which looks at the performance of the pairs across multiple time frames. Quantumtrading.com is where you'll find details of all the indicators. As I said, you can buy one. We have bundles or the full package. If you whether you buy the package one or a bundle, they're all covered by 7-day money-back guarantee. They're all covered by 24/7 support, and all upgrades are included. The big advantage of buying the package is that when we develop new indicators, they are added to your package for free. Anything else? And the platforms we have available at the moment are MT45, NinjaTrader, TradingView, and we're just working on TradeStation. In this session, I've actually got MT5 up. David has NinjaTrader. I know what I was going to say. Last thing, if you buy one or two products and then you ever want to upgrade, you will always get a credit for whatever you have purchased. And the website is quantumtrading.com. The education program I mentioned earlier includes the full package of trading indicators plus everything that is in the program itself, and it really is all you need to know to trade forex with confidence. That website is quantumtradingeducation.com, and you'll find details of the modules and what is actually included in the program itself. And finally, my own site, annacooling.com, is where you will catch up with my analysis, what's going on my up to date on my Facebook pages. And as I mentioned, I'm going to have a look at the pound Aussie, and it is a personal favorite, and it's one that I do tend to analyze and write about. Not just because it's one of my favorites, it's because it delivers some fantastic trends and some fantastic amounts of pips in, on the faster time frames. Don't ever accept the view that you cannot have a trend in a faster time frame, and you have to be satisfied with maybe 1 or 2 or 5 or 6 pips. It is possible to take some really nice moves in one of these cross pairs. I'm not going to go in about the cross pairs this time. I have quite strong views about cross pairs and why more traders should pay attention to them, because as I said, to me the pound Aussie, it kind of speaks for itself, as it were. I'm just going to pass over to David, and then we'll have a look at some charts.
Thank you, darling, and hopefully you can hear me. Can you hear me okay, darling? Yeah, fine, brilliant, lovely. I can't hear myself in my own headset, but that's my problem, not yours. Good to have you join us today, and a very warm welcome to you wherever you are in the world. Just to add to what Anna said, I've got the NinjaTrader running, so we will flip-flop between the two. If you have any questions, more than happy to answer them on air for you. If they're short questions, if they're longer questions, we'll answer them on air. If they're short questions, please just drop them in the chat box, and we will answer them there for you. Just scanning across on the CSIs. I've got 3 minutes, 12 minute, and the 1 hour, and I'm going to pass back to Anna, and we will get going. And as many of you know, I'm sure you know this already about myself, I always look, the first place I look for any opportunity, I'm always looking at the extremes. What is overbought, what's oversold? And just running my eye across there, you can see the New Zealand dollar very heavily oversold, the white line. It's been bouncing around at the bottom there in oversold territory. The Aussie is still selling off quite hard. And the dollar's up at the top. The red line is flip-flopping around in overbought there. I've just there's been a decent move on Swiss franc. You can see the green line there diving quite strongly on 12. And that's certainly been reflected in the faster time frames as well. So there's decent selling on Swiss franc right now. And it's just a question of picking up which currency to counterbalance that with. You might look at the dollar, which is rising a little bit, Canadian there, and also the British pound. The British pound's coming off, as you can see on the 3 minutes, got into overbought and is now turning lower on the faster time frames. I'm going to pass back to Anna, and we will get going.
Thank you. Right, these are the three really time frames that I tend to focus on the most. I have the hour, I have the 12-minute, and I have the 3-minute. Now, if you've got MT4, obviously you won't have a 12 and a 3-minute, and it's one of the reasons why I have I tend to prefer MT5 because you have this wider selection of time frames. Now, the 1 hour chart is really, as for the time that I'm looking to stay in a trade and the kind of moves I'm looking for, to me, it just suits me. Multiple time frames is a choice that, it is very much trial and error. David's use of time frames is very different to mine. He uses a Ninja Trader. You can use more than 3. I would, if 3 is too many, then please, do consider at least 2. Don't restrict yourself to just 1. That is really, you're not going to do yourself any favors. Now, the first thing to note about what I see on the 1 hour chart is I can obviously see here what has been selling off in the previous session. We can see here the New Zealand is selling off. We see the Aussie selling off, but we can also see there's been a turn in the British pound. We can see there's a turn in the Canadian. We see the euro. The euro is actually still rising quite strongly. We've got the dollar up here rising, and we've got the Swiss franc just turning over. Now, the CSI, not only does it give us one layer of information, it gives us another layer of information, because when currencies are moving in parallel, as the euro and the US dollar is moving, is also telling us that that pair is probably in some kind of is range bound, it's in consolidation. And given that the vast majority of traders do like to trade the euro dollars, which I have to admit I do find a bit puzzling, because euro dollar, I think over one period in over a week, don't think it moved more than 60 pips. And if you're trying to take moves out of a pair that is moving, has such a low volatility, then you are making life very difficult for yourself. I know why traders gravitate to the euro dollar, because a lot of brokers offer very, very competitive spreads on it. But if you look at something like the euro against the Aussie, big looping, sweeping moves, yes, you're going to pay more in the tenths of a spread, but then you can stay longer in the trade. So the one kind of balances the other out. So that's the technical picture that the hourly chart tells me. So what it tells me is I can see, after what happened yesterday with the British pound, the market is now back buying the pound. It's actually been bought in the 12. This is where it was earlier on this morning, quite strongly. The Aussie is still carrying on lower. And on the 3-minute, obviously, you're going to get much more of those oscillations, those pullbacks, corrections that you see when, a pair or a market is in a trend, because nothing moves up and down in a straight line. So that's the technical picture that I see in front of me. So I then pull it down and I have a look at how is that reflected in the sense of the pairs that are, how is look at the pound pairs. Here we are. Right, so I look at the pound pairs and I say, well, where has that buying of the British pound been the strongest? Well, we can see here it's actually been in the pound New Zealand, and my pair that I tend to focus on more is the pound Aussie. I think at one point, I think the pound Aussie was actually above that, and in fact on the 12-minute chart as well. It's now the pound Aussie has gone to spot 2, but it was actually above the euro Aussie. That was at spot 1, and the euro Aussie was slightly lower. What that's also telling us is that yes, there's been buying of the Aussie, but actually it's the driver for that pair is probably also the Aussie is continuing to sell off, partly because of the fundamental news that came in overnight, which was not very good for the Aussie dollar, but also because the Aussie is reflects risk sentiment. Overnight, markets really didn't pick up the strongish move in equities from New York. There wasn't a carry through of positive sentiment in Asia. So in this one pair, in the pound Aussie, not only does the CSI give me the technical picture for the individual currency, and the matrix then points me in the direction of the pair maybe to consider. Now I've actually pre-selected my pair partly because pound Aussie is one of my is one of the pairs that I look at that, most often. But if I don't have a pre-selection, then this is how you would use the matrix. So if you are totally, you really don't care which pair you're looking to trade, then this is what the matrix will do for you. Now, what we can see here, this is the hourly chart. We can see that the Aussie is still falling, the pound is still rising. So on top of that, let me just quickly go over, let me look at the chart. Let's find the pound Aussie chart here and see what's going on. Right, before I go back to the technical picture, I just wanted to make a couple of points about the pair, the pound and the Aussie, first as individual currencies and as the pair. If you've just started in this market, in this business, the one thing you have to get to grips with is you really have to get to know your currency, not before you get to your currency pair. You have to get to know what is likely to be moving that currency, when is it likely to be moving, which is why you have to know how the releases are going to impact that currency. That's one. That's on one level. The second level you have to then begin to appreciate is when the releases come along, and most of us use. Let me have a look quickly. Here we are. Let's have a look at Forest Factory. Here we are. We all go to an economic calendar and we see that the releases are very helpfully given a ranking. They're given a kind of traffic light system. So when they're red, high impact, you've got yellow and you've got orange. Now that's very, very useful, and it's certainly a very quick guide to what is as I said, what may affect the currency that we are likely to be trading. In this case, it is the Aussie. And just as I'm speaking, we've had some news come in for both France, and we've got some Spanish news, and we've got all day we've got the German preliminary CPI. But we'll just set that aside to one moment. What we also have to then get to grips with on another level is, although this may be flagged as red, is this particular release, in terms of to gauge its impact, will depend on the economic and business cycle. And before you sort of throw your hands up in horror and say, oh my goodness, does that mean I have to be some kind of economist to understand what you're saying? The short answer is no. We all know there's a business cycle, there's an economic cycle, and at different points of that cycle, different releases carry more weight and have more impact. And this is something we cover in great detail in the forex program. We break it down, we make it as straightforward as we can. To give you a very, very simple example, the Fed has a number of mandates, and one of them is labor, one of them is the employment numbers. Now, we know when the NFP comes out, there's a certain amount of volatility. But the volatility depends whether is the Fed getting to grips with its mandate or not getting to grips with its mandate. At the moment, if you believe the figures, the Fed has actually, there isn't a problem with employment in the US. The country is at full employment. The economy is doing well. So yes, we have volatility when we have NFP, but not as much as if we were at a different point in the economic cycle. What you also then have to look with this data, another way to gauge whether perhaps it's likely to have a big impact or not so much of an impact, is this. You always get a graph with on Forex Factory, and just have a look at the graph and see how how this release, is it very, is it consistent? Does it always miss, as it were, or does it come in more or less on target? If you have a lot of variation, you think, oh dear, then possibly it may be more volatile than than usual. Whereas you look at something like this, you have business confidence, and you can see here it's much more steady. So you see here, this is the business confidence. This is obviously, things are not looking, people aren't feeling confident. They're not going to spend and they're not going to invest. And this is, it's coming worse than the previous. This is the previous. this number has come in much low, much worse than expected. Is it any surprise that the Aussie sold off? And it's also come at a time when the whole global economy is not, it's all very fragile. You've got the issue with China. So when you add that information to what you see on the technical chart, on the chart, it will also determine whether the move is going to be perhaps stronger than you would expect. Go back to the chart here. So for example, at this point here, yes, it was all very positive, and then there was a bit of let's have a look. This bit here, this bit is much better. It was all going very nicely, then it fell some more, yeah, then it was a bit, and then it started to recover. And at these inflection points, that is when you can get some surprises in the move. As I said, don't, if this is all new to you, don't beat yourself up about it, but it's just something that you have to factor in, add to your knowledge of an individual currency and an individual currency pair, because then you have to pair it up. You then have to say, okay, the Aussie and the New Zealand have been selling off because of the news that came in overnight. So why did I pair it off with the pound? Because the British pound had a terrible day yesterday, another terrible day yesterday, because of the politics. But the move was really, really overdone, because what has actually happened, and this goes back to getting to understand what is likely to move a currency, both from a fundamental perspective and increasingly in the UK from a political perspective. Yes, it's on the surface, Parliament was prorogued. It was not really suspended, because suspending Parliament means they're never going to meet again. There has been a 4 or 5 day delay to when they all get back together again. There's going to be a new Queen's speech. There's going to be etc., etc. And then we have this deadline. Now, there's all sorts of reasons why that happened. And you kind of say, well, okay, we had a knee-jerk reaction in the markets to the news. The pound sold off, and let's have a look at it selling off here. This is the news from yesterday. What happened is that was the knee-jerk reaction, bang, right down to the support line at 80.14. Then we had a ton of buying coming in, and what happened? We had volatility and the trigger of our volatility indicator. This is an indicator that is triggered when the price action in this candle is outside of the average true range. What then happens is price then retraces to within the spread of the candle, and you either get a period of congestion, a sideways movement, until this level high and low is then cleared. This is what's been happening. We've actually had a further period of congestion, and in fact the move higher was then prompted, as I said, driven by the Aussie, which the news of the Aussie came in much worse than expected. Now we've had another reaction. This is actually this is the London Open. But from a technical perspective, setting aside the politics and the fundamental, when I look at this chart, this is the little move that I've been looking at on the faster charts. I know this move is likely to be capped, other than the fact that it's the London Open. But why? Because I've got the high of the volatility candle, but I've also got this very strong resistance line that I've got here, 81.77, which I think I said on my Facebook page, if it's going to carry on higher, this is where it has got to, it's got to clear this before it gets any further. And just finally on the British pound, so those are the technical reasons why. Let's just go back to the 3-minute chart. I'll see quickly. Let's undock this quickly. There we are, and let's move this to the 3-minute chart. Right, this was the move from this morning. This goes right back here. This was within the spread of the volatility candle, but this is the move higher in the pound Aussie, and we're talking a move about 81.35. Okay, we've got a shooting star up here. Let's go. Let's that 46. How many pips? It's about 40 odd pips off a 3-minute chart. So to me, that is, I'm delighted with that. Why wouldn't any trader be delighted with that? But we have to also put the price action into the context of the session. The forex market is a 24-hour market, but it's actually 3 separate sessions. I also have the 12-minute chart. In fact, this is the move away from the congestion period. Now we've had this huge volatility candle. This is a very typical reaction that we see at the London Open. Also, when you are trading these kind of time frames ahead of session crossovers, you have to decide whether you think you're going to hold through the crossover or just wait for to see what happens, because there's always all sorts of tricks played at this time, and you can then re-enter if you so wish. Also, with the pound, yes, there's all the politics, yes, there's what is happening, but you also have, there's a couple of things to bear in mind. Is this period of grace, if you like, that is now being given, where, you know, Parliament is going to be, you know, there's people, the people within Parliament, outside Parliament, who don't want to know, they don't, they actually, what they want to do is they want to stay within the EU. That's the bottom line, and it's all wrapped up into whether we can't have a deal. We want a deal, a new deal. Call it whatever you like, but the mechanism by which perhaps they can fraud, they can try and you know, endlessly delay that has kind of been put aside. Does this mean that perhaps, you know, there's more future, you know, there is a chance for negotiations? Maybe a new deal will be agreed. That will be a reason to buy the pound. It's now going to happen in an environment, if you like, where perhaps it's going to come to fruition. That's, I'm not giving you my political views. I'm just telling you this is how the market might interpret this. We also have to remember the pound has been sold off extremely heavily, and there's fantastic downward moves in the British pound. Are there reasons to buy the British pound? Maybe, you know, you may not see that if your view is, you know, if you have a view on the political side or the fundamental side, but there is a view that there are a lot of M&A, mergers and acquisitions in the pipeline, really big stuff. I mean, talking billions and billions. They're at early days, but one of the reasons when a currency is weak in a country like the UK or in Europe, then outside investment comes in because assets become cheaper. And as I said, I have read there are some very big merger and acquisition projects in the pipeline. Now, at some point, and we're talking billions, the pound will have to be bought. And we tend to forget that the forex market is there to facilitate, you know, it is a practical market. Corporations have to buy currencies, you know, central banks have to buy their currencies. There's all sorts of reasons. So as I said, by all means, be aware of the Brexit, be aware of the volatility that can come, you know, from what is going on and from the fundamentals, but be aware also that there may be more reasons, there'll come a point where there'll be more reasons to buy the pound than there is to sell the pound. So that's what I wanted to say on that. I think that's it. David, anything you want to say to that? I'll turn myself off.
Thanks, darling. Hopefully you can hear me okay. I can now hear myself in my headset, which is great. So thank you for your patience on that. You can move over to me. Yeah, basically I've got cable running, and also just checking out on the currency matrix to see whether that's universal buying or selling. Do you want to switch over? Just going to switch screens. I've had, as I say, I've got cable up behind this. Just move that out of the way. Sorry. This is just the currency matrix on 5 minutes. And as always, one of the things you want to see on the currency matrix is not only which currency pairs are moving, which are moving towards the extremes, which are moving strongly higher, strongly lower, but also in terms of whether that buying or selling is universal in terms of the particular currency. And I've isolated out the British pound here, which you just do on the toggle here on the right-hand side. And as you can see, it is pretty much, this is on 5 minute, remember, so this is a very fast time frame. We've got the pound New Zealand at the bottom, cables down here at spot 25 at the moment, but you can pretty much assume from that that the market en masse is selling the British pound. There is no divergence there. In other words, you haven't got a currency that stands out in opposition to that. For example, you haven't got the pound CAD up here somewhere, which would denote pound buying, and CAD selling. These are all ranked correctly, and obviously you've got euro pound up at the top here because the pound is the counter currency. Just head over onto the, just to move the chat box out of the way there. This is on 5 minute, just shaping up. That's the heavy selling we're seeing on the pound. And one of the things that you will invariably see as you come to session crossovers, which is why we go into them in so much detail on the program, is and a lot of traders are not aware of what actually goes on at a crossover or the significance of the crossover. But rest assured, if you're seeing a currency pair rally ahead of the crossover period, then it draws you into the prospect of a reversal. Reversals are key, and the reason they're key is simply because, I'll just pull the charts up on cable. Where are we? There we go. That's it. There we are. That's where we are at the moment. This is cable, pound dollar. I've got the 1 minute, the 2 minute, the 5 minute, the 10 minute, the 15 minute, and right over onto the daily here, over on the right hand side. Let's go to, let's just pull up the 1 minute, make it full size, a bit easier. There we go. And what you invariably see, what you will often see, is a rally into the open. You'll see a market rally, as we saw here in cable. It was rising, not terribly strongly. The fact of the matter is this is 8 o'clock London time, so this is where the volumes really start to kick in. It's what you expect to see, this natural surge in volume, purely by virtue of the fact that London market is the largest market and is now opening up. It doesn't invalidate what's gone on over here, it just simply compresses it down, and it's just a fact of life that when you're looking at volume, you have to compare like with like. So from a comparative point of view, what we're looking at, this is a 1 minute chart. From a comparative point of view, we are looking at this section of price and volume relationship in here. We can't compare this over here because this is a different session. This is Europe, running from, where are we, 7 o'clock over here. This is when Europe opened, and this is right through to 8 o'clock on UK time. What we're also seeing now is we're seeing some congestion building. We've got the volume point of control. You can see it's literally building in real time, this yellow line. The market has reached a temporary point of price agreement, if you will. Excuse me, just switch off for a moment if I can find my chat box, which I can't, so don't worry. Excuse me, I'm just going to clear my throat. And as you can see, the volume point of control here on 2 minute is now building purely because we've got congestion. The market has moved into a sideways region, and the volume is now building progressively in that area. So the volume here is higher than the volume here. Hence the reason the volume point of control is now down at this level, the fulcrum of the market. In other words, we are seeing a point at which the bearish and bullish sentiment is in equilibrium. It's the equivalent of a seesaw, if you will. Imagine as a seesaw, you've got two people on a seesaw. When both are equally weighted, then the seesaw won't move. It will simply sit in the middle on the fulcrum. Once bearish or bullish sentiment takes hold again, then that is when the market will break away from the fulcrum, the midpoint, if you will, and one will take the market higher or lower, depending on whether it's bullish sentiment or bearish sentiment, which then is in ascendancy, and that will be dictated by the volume associated with any move away. You can see here we've had a whole series of volatility candles, so this is a volatility trend. They've each followed one another. It doesn't always follow that in the volatility trigger that the market will congest. You just have to be patient and wait. On a 1 minute chart, obviously it's very quick. This one will follow through. This one now we're seeing the reversal. We've got a strong reversal. Almost got a 2-bar reversal here. We've got a doji candle, classic of indecision. The trend monitor is remaining steadfastly red for the time being. It's also red on the 2 minute. It's red on the 5 minute. Hasn't yet transitioned down on 10 minute. Let's pull that one up. There we go. We've got volatility there as well. No great surprise. The trend monitor is in transitional phase. The trend line is just diving below the midpoint here. But as yet, it's not followed through to that much slower time frame, which is what you expect to see. If we go down onto the 15, more volatility. And again, the trend monitor hasn't yet transitioned away out of the bullish phase. We've gone into a darker blue, so there is a transition in place, but we haven't yet got the red follow through from these guys up here on the much faster time frames. Just head back to the CSI and see what's going on there. There we go. Right, on the currency strength indicator, let's pull that open a little bit. There we go. That's on 5. Let's go and have a look at the other time frames. This is on 10. So in terms of the strongest move right now, it's not actually cable, to be honest. It's this, if you remember, Anna highlighted the New Zealand dollar here, this grey line. It's actually white on MT5, but you can change the colors accordingly. but you can see the strength of buying that's coming in on the commodity currencies per se. In fact, all three. You've got the Aussie, which is rising very strongly. You've got the New Zealand dollar, which is rising very strongly. You've now got the Canadian dollar, this purple line, which is also rising strongly. So in terms of looking at a trading opportunity for the British pound, you will be better served. Certainly the strength of trend will be much stronger in a pound Aussie and a pound New Zealand than it will be in the dollar, because what's driving cable right now is very much the sentiment towards the pound, and it's not counterbalanced by strong selling of the dollar. There is some there is minor buying of the dollar, but it's not as strong as the buying that is now taking place in the New Zealand and in the Aussie. So if we switch over onto let's go back to the pairs again. That's why that particular move has stalled as far as cable. But if we go to the pound, let's go pound New Zealand, flick that over on there. Just wait for that to load up. There we go. That's what we're seeing right now. That's the strength of move there. We're also seeing, what's interesting about that is down onto, let's just pull that back a little bit. There we are, leave that there. We've got a lot of volume coming now, as we expect. Doji candle here also. So that is coming to a pause point there. Just have a look at the pound Aussie. Probably a similar picture there too. Just wait for that to load up. Yeah, we've got some minor congestion building. This is on the 1 minute, so we're in a congestion phase here on 1. Bearish picture, trend monitor's bright red. Markets try to rally there. We're quite happy comparing volume across here because this is London Open, so the volume here is all comparative. We can't go the other side, but we can certainly carry on from here. You can see the market's tried to rally here. What have we got? Very low volume, or certainly a decline in volume when we look at these two candles here. This was okay, nice widespread, decent volume. But then we get this candle here, the volume's fallen away, so the interest to the upside, in other words, is falling away. Then we see the move to the downside, rising volume, so weakness continues, but we're trading around the volume point of control. So until we break below this region here, it's a question of being patient and waiting for a continuation of the trend to develop, if that indeed is what is going to happen. We've got congestion here, a doji candle followed by another doji candle. So lots of indecision, and we're sitting on the VPOC anyway, so we know that that's what we're expecting to see for the time being. Below, the volume is falling away. We'd obviously be looking at volume on slower time frames. If we break to the downside down to 20 odd, then we like to jag another leg into this. Let's just see how this develops. There we go. Breaking to the downside. See what we've got in the other time frames. We've got a pivot low, pivot high, which is signaling in congestion, which is what we're seeing, and we're also sitting on the volume point of control there as well. Up onto 5. A little bit smoother here. You can see the rally here, the attempt to rally. Strong volume under that. What's that telling you? It's telling you that if you've missed the move, then it's probably time to jump back in again, because this market's trying to rally. There is some buying coming in clearly, but it's being knocked back for the time being. In addition to that, we're breaking away from the volume point of control, and on this between, where are we, 32 up to 40, or in other words, a spread of 8, we've got a massive amount of congestion overhead in place now. We've got the volume point of control itself with 1.5 tons of volume. This is the extreme volume that's sitting there now. And above and below, we've got two major areas of resistance now. These were originally, this one was acting as support at this point, but it was then breached by this candle, so it now becomes resistance, I'm sure you can appreciate. The thickness of these lines, this is the difference on the accumulation distribution indicator. It basically works on price. In other words, it's price-based support and price-based resistance in exactly the same way as the one on Anna's MT5 does. There it's denoted by a thick line, a solid line, as opposed to a dash line. But on the accumulation distribution indicator on NinjaTrader, we denote it by the thickness of the line. In other words, the thicker the line, then the stronger that region of resistance or support is. And as you can see, this is a very wide line. It tells us it's very, very thick, very sustained, and therefore any recovery into this area is really going to struggle. And if it's going to break through to the upside again, it's really going to have to do that with some decent volume, because if it isn't, there's no way on the planet it's going to break through this region for the time being. little bit more indecision there, higher volume. So we've got certainly there is buying in the market, but it's very indecisive. To the downside, if we get down to this region again, we're going to break down because we've got a very low volume region here. So in terms of volume, looking at volume through the perspective of support and resistance in exactly the same way as price-based support and resistance, below here we've got very light volume. So the further we move deeper in this move, the volume is attenuating, it's falling away. So therefore, from a volume perspective, at any rate, we would expect this move to continue fairly rapidly because there's very little in the way of volume to cause the market to pause, which is why when you've got these regions, and to some extent these regions as well, when a market gets to that level, these areas are packed with either old orders or orders that have been placed or traders who've been trapped in weak positions and looking to exit. They've maybe jumped on here, now they may be a little bit frightened, so they're looking to exit if this market rallies back up to the volume point of control. So these areas are packed with these orders, and therefore it's another reason that the market will pause where you've got high concentrations of volume. Equally, if you've got low concentrations of volume, as you have here at the moment, it means there's very little there. There's very lightweight in terms of trading that's gone on in that area. It also signifies something else, that the market has little interest in that region of price. Here it does, here it doesn't. And in terms of the market's interest in a level of price, then if a market has a little interest in it, then it's likely to move through there also because it's lightweight in terms of volume. Yep. Yep. S&P's jumped 15 apparently. Let me just hop over onto the indices to just see what's going on there. Always have them up. I didn't want to know what's going on in terms of risk. There we go. This is what we've seen. A sudden spike. Is that any particular? That's China. Okay. Are they emollient? Warm words from China. Okay. As Anna said at the top of the hour, what we're seeing in these markets over the last 4 or 5 years, I would say, is increasingly the effect of politics. Originally it was 3 dimensions, now we have to include politics as the 4th dimension. So we've got technical, relational, fundamental, and now we have to put politics in there. And God forbid, quite a lot of that politics is now conducted on Twitter. So all the more reason that you have to understand, first of all, the relationships, have these markets up and running all the time, and in addition to that, have a decent live feed. The one we always suggest is Talking Forex, which is brilliant. You get a squawk feed with it. They're pretty good off the mark. It's just key. But in addition to that, having the markets, all the markets running, so you have the bond markets, you have the equities and commodities, all of them, all the indices running, so you know what's going on. This is Globex, this is running 24/7. It's a fact that if you don't have access to, if you're not running on Ninja, rest assured on MT5, a lot of these markets are now available. The indices are there, so you can find them pretty easily. If you don't have that access to that, you can find them on investing.com. They're all available. Equity markets trade 24/7. Even if you're not on an electronic contract like this, which is trading 24/7, there's a cash market open somewhere. There's always going to be a physical exchange which is open and trading market sentiment. So you're always going to know what is going on. You can see the massive surge in volume that's come in with this. We've also got volatility triggers. We've got a volume point of control on here. This is on 5 minute on the YM. This is the NASDAQ and the ES. Let me just flick back onto the Forex again. Actually, before we do that, no, just go back over there. See what's going on. Okay, a little bit of a pause point. Let's just go back to CSIs. There we are. That's what's on. That's on 10. Let's drop down onto 5. You can see the pound here is very overbought on 5 minutes, so maybe looking for a bit of a kick. You've also got this kick down here, this heavy selling on the yen index, on the yen currency per se. No great surprise because we've seen a sudden turn in terms of risk sentiment. That'll be reflected in the yen, and with the indices rising, we're likely to see the yen selling off pretty sharply. So you'd be looking at a buy on the Aussie yen, which is rising strongly, and a pretty strong sell on the yen. Equally to the downside, and that of course will be backed up by the fact that you understand risk sentiment in indices, and if you're seeing that in indices, then you're going to see it across the yen complex as well. Can I pass back to you? Okay, pass back to Anna in a moment. Let's just go back to, let's head on down here. These are the currency indices themselves on 5 minute. Top left is the yen, top right is the dollar, bottom left is the euro, and down at the bottom right we've got the pound. You can see we had this strong move in the pound selling. We're now starting to see the pound coming back. 2-bar reversal, so we're seeing some decent pound buying. We had some reasonable Aussie buying, but now we're starting to see that reverse off the top there. This is the strong. When we opened up, I was watching the yen. It was pretty much in congestion. Now we're seeing that strong weakness coming in as a result of risk-on sentiment returning. And the euro at the moment is not doing a great deal. It's flip-flopping around, bit of volatility in there, but no great direction at present. Let's go back over here, see what's going. Okay, we're still in congestion, not breaking away for the time being. Got volatility here, reversing in there. Got some, let's have a look up here. We've got pretty spiky price action. That's a long-legged doji candle. It's not, it's nothing else other than indecision. Ton of volume under it. So, you know, the markets are really indecisive for the time being. And that was backed up with volatility as well there also. Okay, I'm just going to pass back to Anna. Sorry. Switch myself off. Oh, there's my chat box. My chat box disappeared over onto the other side of the screen for no apparent reason. There we go. Right, I'm just going to switch off and pass back to Anna. Apologies, I had my chat box closed. In fact, it disappeared over onto a second screen, so sorry about that. Stephen, yes, are you still looking at providing your system on TradeStation? Absolutely. Working on that at the moment. It takes us a few months to get a new platform up and running, purely because there's a lot of development work involved in porting the indicators over because they are complex. Secondly, we have a huge amount of work to do in terms of support pages and videos and everything else. But yes, TradeStation, if you check it, you can check it out on Labs at Quantum Trading Labs, labs.quantumtrading.com. Where we keep you posted and updated with what is going on in terms of TradeStation. But yes, definitely. And we would hope to have that up, I think, certainly by the end of the year at any rate, all up and running. But it's all looking good. And TradeStation is a fantastic platform. It has a wonderful radar screen feature, which allows you to scan not only all the markets, but we can also integrate our indicators, so it'll pull up signals on the indicators as well. It's just a fantastic platform. And we're absolutely delighted. We're, in fact, speaking of that, I'm actually up there next week with TradeStation in London. There's a big conference going on, so I'll be up there for a couple of days, and no doubt come back with some other ideas for either enhancing what we have or adding 1 or 2 more products to the portfolio. I'm going to pass back to Anna.
Right. I think actually, from going back to what I said before, right at the beginning, when I said when you have to get to know your currency and your individual currency and what is likely to move that. Now we saw the dramatic moves. It's appeared to be a sell-off in the British pound, and you're thinking, hold on a minute, what's going on? Nothing has changed since yesterday for the British pound. But what did change, because of, as I said, because I like the pound Aussie, and we've seen the kind of moves that you can get in the pair. I have to tell you, it is not as volatile as perhaps you may like to think, but it's purely because, as I said, Aussie, it reacted to the fundamental news, but it is also a currency that is a proxy for risk. So when it's with the Aussie yen, it's a proxy for general risk in the markets, but it's also a currency that is very heavily connected to the Chinese. And this is the 2 items of news that have come in really pretty much out of the blue, I would have said, because the market is desperate to have some good news about the ongoing issues with the tariffs between the US and China. And these words from China are actually, you know what, they say, call on the US to cancel, to avoid. That's a big thing, and that is what we're seeing reflected in the moves. Now, if you weren't aware of that, if you didn't understand this connection and you just looked at the technicals, because the technicals certainly on the pound Aussie, just on the chart, you think, yeah, it's going along quite happily. Yes, we do expect a little bit of volatility around the London Open, some sort of tricks and what have you. But if you don't understand this third and fourth dimension now to the currencies and currency pairs, then, as I said, this is where you will be at a disadvantage, and you just won't understand what is going on. Now, what do you then have to look for as a kind of, what is going on to give you the heads up from on a chart basis? Well, you can go over to investing.com and really keep an eye on the S&P 500 futures. Now, that is obviously the US futures, but it's the one index that really everybody kind of uses to see whether, are they buying it or are they selling it? Oh yeah, well, if they're buying it, then, the sun's out. What are they going to be buying? They're going to be buying the Aussie. You think, well, is it as crude as that? Well, yes and no. In some ways it is, because, if the market's happy, it'll be buying risk currencies. If it's not happy, it'll be selling risk currency. It'll be the yen, it'll be the Aussie, it'll be the other commodity dollars. So the S&P 500 is like a quick, you've got the bonds, obviously, the bond yields, but the S&P is a quick and dirty look, if you like, of what is happening. When the market is open, the US market, I'm not sure, do the VIX futures do 12, I think they trade 24 hours. Look at the VIX futures as well, because that is the puts and calls to do with the S&P 500. Look at the number, 19, a highish number. It's not extreme. You only have to look at the chart. The height of the, this has been up to 85, went up in 2008. Some huge extreme number, that is serious. That is the world ending, And when it gets down to sort of, down to the 9s and the 10s and the 11s, getting back to single figures, the market is very, very complacent. People use fear and greed. Really have to it's more sort of complacency and exuberance, if you like. Complacency means, the market is, equities are going higher. So that's right. Now, if you've got NT4 and NT5, what you also have is you have the ability, they do, well, this platform does, I know other platforms do as well, is they give you the charts for a version of the futures. So you should, you could have, this is the US 500, this is the version of the S&P. You can see here, this is massive volatility, uprush, volatility triggered completely out of the blue. Well, it isn't out of the blue because of what the Chinese have now said. So this is what we suggest you do. This is the hour. If you look at the 3-minute, what was happening? Well, it was kind of going nowhere. As you can see here, a little bit of a sideways, but with a kind of bearish tone to it, as it were. Now what's happened, as you always get with volatility, you had the spike higher, the classic retrace to within the spread of the candle, and we'll see whether the market then decides, is they serious? Is it a serious offer that's being made? How is the US going to respond? Well, obviously it's the middle of the night there. The market will, you will get the response in the market if you know what to look for and also understand how that impacts the currency and currency pairs that you may or may not be trading. That's what I've got to say. Anything else to that? Fantastic, brilliant. I hope you enjoyed what we've done today. I hope you've learned something maybe didn't know before. I was hoping to get the new product that we've got, which, as I said, is the bundle for the CSI and the matrix combined. We always did have it as individuals, but what we've done is we've popped them together and made it more cost effective. So we'll see what happens for the rest of the day. We are not back this afternoon. Normally we have a session where we've got a meeting that we've got to get to, but we will be back next week. So enjoy the rest of the trading day and the rest of the week. Don't forget, on Monday it's Labor Day in the US. I suppose this week is the last of what we call the summer markets. Liquidity has been pretty good, actually. There have been some fantastic moves in quiet summer markets. But take it from me, it's if you think these last few weeks and months have been hot, you wait until they all come back from holiday next week, sort of from Tuesday onwards. But whatever you're trading, enjoy your trading, and as they say, what does that even, Hill Street Blues? Stay safe out there. Take care.